Hello friends, there has been a lot of news coming out of the Federal Reserve, so let's break it down and more importantly, let's talk about what it actually means for the housing market. Last week, the Federal Reserve met, and as expected, they did not cut rates. The Fed funds rate stayed in the same range, and the markets weren't surprised. No drama there, but the big headline was this: President Trump announced Kevin Warsh as the new Federal Reserve Chair. So who is Kevin Warsh and why does this matter? Kevin Warsh is a longtime banker and former member of the Federal Reserve Board. He served from 2006 to 2011, right through the 2008 financial crisis. That means he's someone who has experience leading during serious economic stress, and personally, I see that as a positive. Historically, Warsh is known for having a hawkish approach, meaning he's careful about cutting rates too quickly. At the same time, he's also been critical of the Fed being too slow to act when conditions change. So it's still early, but his background suggests he'll be very data-driven, not reactionary. Now back to the Fed meeting itself. The vote to hold rates steady wasn't unanimous. It was 10-2, with two governors pushing for a small rate cut. That's interesting because the Fed usually prefers to move together. Some analysts believe those dissenting votes were part of positioning before the new chair was named. What matters now is this: with a new Fed chair in place, we may start to see a more unified Federal Reserve moving forward. So will rates come down? Possibly, but don't expect anything dramatic. Most forecasts are calling for maybe one or two cuts later this year, which would put us closer to a neutral policy stance. That said, I don't see mortgage rates crashing into the mid-5s anytime soon. Realistically, we're likely living in a high 5 to low 6% world for a while. Now let's talk housing. The market we're in right now is likely the market we'll see into 2026. For sellers, this is still a strong position, especially in markets like the DMV. Inventory remains low, buyer confidence is better than last year, and demand increases when rates hover near 6%. If you're selling, the key is strategy. Look at three things: homes sitting on the market that buyers are rejecting. 2. Homes currently under contract, those show where the market is going. 3. Recent sales to understand where prices have been. That tells you exactly how to price and position your home. And one more thing, don't wait too long. Spring always brings more listings, which means more competition. Buyers are out there right now, waiting for inventory. For buyers, my advice is simple: stop waiting for the perfect rate. It may not come. Instead, focus on what matters. Can you afford the payment? Can you see yourself there for at least 5 years? Does the home fit your life, not just today but long term? If the answer is yes, that's what wins, regardless of headlines. Bottom line, the Fed news matters, but local market data matters more. Rates may move a little, but strategy, timing, and preparation will always matter more than trying to time the market. And if you need help navigating it all, click the link, reach out, and we'll help you build a smart plan for your situation.